we were looking at a photograph of a £50 note, and they're called promissory notes. So the issuer, the Bank of England in this case, promised to pay £50 on demand. That's a form of money, and it's dependent on the trust, the confidence towards that issuer. This screen is a list of longer term promises issued by the Bank of England as well, on behalf of the British government. They're entirely in electronic form these days. They're known as gilts, gilt-edged stock, because when they were in physical form, they were printed on beautiful paper with golden edges to reassure the quality of the promise sitting behind them, rather like marble and mahogany and glorious banking halls, to give an impression of, and a well-founded impression, we trust, of stability. So this first one that we've highlighted, it's a 0 3/8% 2030 instrument, so it'll repay the original amount invested in 2030. It was issued in 2020, and it pays, they're called dividends, it's interest. It pays interest at an annual rate of 3/8% twice per year on those two dates, April and October 22nd. And there's 37,000 million pounds nominal value of it. Those are seen as a very safe long-term investment. They pay a low yield or rate of return, but their quality is perceived as very high, so they are popular to invest in by investors who want to keep their capital safe. So it's a form of financial capital, it's a bond, and the safest form of bond, a promise issued by a recognized, reliable central bank of a government which is having a relatively sound economy. And there are many others issued at different times with different rates of interest applied to them, depending what the rate of interest was at the time of issue. So the next one was issued in 2007, and we see it was paying and is still paying nearly 5%, 4 3/4. That was the interest rates prevailing at the time. So that's the rate that needed to be offered on the bond to sell it at roundabout par. So in general, these promises are called paper. And in this case, there are no financial or other assets backing up the paper. It's simply the promise of the issuer, Bank of England. That promise is seen as so strong that these particular instruments, investment assets, aren't backed by anything else. Other bodies can issue debt. They would generally be of greater risk than this form of debt, and therefore the need for the issuer to reassure the investor is ever greater. Nobody will buy bits of paper representing promises or electronic bits of paper representing promises unless they have a high degree of well-founded confidence in the promise. So issuers need to risk manage, and they need to communicate about their levels of risk effectively.